walk in and I asked to speak with the broker. He was there. They put me in the conference room. He thought that I wanted to become an agent working.
That's the default.
And I said, no, sir, I want to buy your company.
Hello, everybody. I'm Jason Hull, the founder and CEO of DoorGrow, the world's leading and most comprehensive coaching and consulting firm for long-term residential property management entrepreneurs. For over a decade and a half, we've brought innovative strategies and optimization to the property management industry. At DoorGrow, we are on a mission to transform property management business owners and their businesses. We want to transform the industry, eliminate the BS, build awareness, change perception, expand the market, and help the best property management entrepreneurs win. Now, let's get into the show. All right, so my guest today is Ashton Thomas. Welcome, Ashton.
Thank you for having me.
So Ashton is a client of ours, but she also is a badass. And so, Ashton, I would love for people to get to know you a little bit. Share a little bit of your background. How did you get into real estate and property management and all of this?
Yeah, absolutely. So I'm actually a third generation real estate broker in Central Florida. My granddad started in Orlando, like way back in the 60s. Both my dad and my granddad, a lot of my uncles, they're all builders. So just kind of grew up in that real estate world. I was on a job site from when I was very little. And so I always just had a love for homes, real estate, just the whole 9 yards. When I was wrapping up high school, about to go to college, my parents suggested, I always had like an entrepreneurial spirit, and my parents suggested that I get my real estate license. And I was like, you know what? It can't hurt to have that. So I went ahead and took the class, got the licensing as soon as I graduated high school. So I was actually a licensed realtor already working before I started my freshman year of college.
Wow.
Real estate is so fascinating because I've been able to see so many changes over the last 12 years since I got into the industry. I started with new home sales construction, actually working for my parents, really learned about what it took to run a sales center. And then I switched to traditional real estate, like what you think of a realtor doing now. From there, I ended up opening my own brokerage in February of 2018. And then property management really just fell into my lap. There was a company that was going out of business because the owner was embezzling funds, and their employees actually came to me and said, you know, we would like to work with you. We would like to work for you. And we're bringing these clients. So I had never written a lease, never seen, really even put my eyes or hands on a lease. Never.
How long ago?
This was 2 years ago, roughly.
Okay.
And just didn't have any property management experience. Figured out that we needed to get some systems in place right out of the gate. And I really took the next year and a half to develop those. And Jason, you've been so instrumental in helping us like succeed in those systems. I helped us identify like the holes in our business and really figure out like what we needed to do. So at the time that I had brought on the property management side, and when I say property management for us, we do both long-term property management and short-term vacation rental. So I have two separate sister companies that operate those. So at the time I had roughly about 25 realtors that worked for me under the brokerage. I had really developed that, grown that. We were one of the largest Zillow Premier agent teams in Central Florida at that time.
Wait, can I ask about that? Not very many agents start their own brokerage. Do you mind me asking age here? How old were you started your brokerage, and what gave you the audacity to decide to do this big thing?
I was 23 when I started my brokerage.
Okay.
And the funny part is I actually wanted to buy a brokerage first. And this is a wild story. You'll love this.
Okay.
So, you look back and you say, what was I thinking? Like, I had some guts.
Yeah.
And one of those stories. So I had initially gone to this guy's office or branch, local real estate agent or a local real estate brokerage. I'd developed his brokerage over like 50 years, had over 200 agents working for him. And I walk in and I asked to speak with the broker. He was there. They put me in the conference room. He thought that I wanted to become an agent working.
That's the default.
Yeah. And I said, no, sir, I want to buy your company. And this was a total cold call. Like I had never talked with him before, never met him before. I ended up negotiating a price for the company, ended up securing SBA financing. Everything had lined up so perfectly. And then a couple weeks before we were actually going to be making it official, he decided that he wanted to sell his brokerage to a family member and not through with me. And so honestly, in hindsight, that was the best thing that could have happened. I had no business running that large of a brokerage at 23 years old with no experience.
How large was it? How many agents?
Over 200.
Okay. Yeah. I mean, massive. Yeah.
And I had secured a price for 2.4 million for the company. So with an earnout, and it was going to be an insane deal if I could have like actually done that. But I was, everything happens for a reason.
Yeah.
So coming off of like the adrenaline rush from that not happening, I was like, you know what? I'm just going to start my own. Why not?
Yeah.
So that's how I started when I was 23.
Got it. I mean, starting your own brokerage at 23 doesn't sound as crazy if you were already trying to buy 200 agent brokerage. Like, no, just, step it back a little bit.
Let's like crawl before we run.
Yeah.
So that was originally what I wanted to do, was just build up a massive brokerage with lots of agents. And I thought that in my head was the dream.
Yeah.
No, for me, it was not. I had grown to about 25 agents, like roughly, like steadily, and kept that number for a while. I realized that I do not like dealing with realtors and their issues over and over and over again, every day in and day out. It became like kind of toxic to me, at least. And I went through and slashed a lot of agents' jobs here because it was either performance issues, attitude issues, whatever it was. They just were not the right fit for us. I ended up keeping a core 5, and they are phenomenal people with good ethics and good sense who care about their clients and represent me and my company very, very well.
What do you feel like gave you the clarity to make that transition? Like, did you just wake up one morning or like, I don't like a lot of these people? Or how did you get clarity on what you really want?
One of the things was I told my office manager, I was so frustrated one morning. I told her, I said, if one more person asks me another stupid question, I am going to lose my mind.
So, and I know the topic that we were planning to talk about today is the marriage of private equity and property management. Capital meets operations. So let's get into that. You have big goals.
Yes.
Big, crazy goals that sound pretty insane to most people. But, the people that are bold, that have the audacity to go after these big things, achieve big things. So what are you up to now?
Yeah. So there's actually a great book by Dr. Benjamin Hardy. He's written like several, and I know you're a big fan of Dr. Hardy's as well. He talks about like those impossible goals and how you really should. And actually that one of his latest books, The Science of Scaling, is really spurred me to action, and not just having like a 10-year time frame, but like a 3-year time frame. And I can condense these goals, what I want to do, kind of vaguely into really specifics and get it done now. So yeah, I would highly recommend anybody listening to also read his books.
Yeah, agreed. Phenomenal book. I got to hear him speak down in Mexico, and he hadn't released his book yet. And I was with a bunch of entrepreneurs that spent a lot of money to be there. And all of us walked out of the room with our mind blown. We were all just like, I've been thinking too small. That's why it's been so hard. And it actually gets easier to grow and scale your business when you start thinking outside of your current mental limitations, which means it has to be something unrealistic or impossible. So that's been a game changer. I've done some episodes talking about this, but same thing for us. Like, we've got some big things we're doing this year that are probably a bit ridiculous. And I don't know if we can pull it off, but if we do, DoorGrow will be the dominant player in the industry. And I already feel like we're a leader, but this will be a game changer, some of the stuff that we had planned. And I've talked about it on previous episodes, just a little bit, what we're thinking of doing, but I think it's going to be, some of these things are going to be a game changer. So, and we've got so many irons in the fire right now, like we move fast, and it's a bit crazy, but that's where the fun is too, right? In business. So I'd rather be lit on fire with too many ideas than be stuck. And I've been that way before, where I'm like, what should I do next?
That's like entrepreneurs' worst nightmare, is to be feeling stuck and feeling like I'm not moving and I'm not getting traction and I'm not accomplishing anything. That is like absolute hell for us, isn't it?
Yeah. I usually joke that entrepreneurs don't care about being happy or sad. They care about whether they're in momentum or whether they're stuck. And when we're stuck, damned, blocked, frustrated, that is hell. That's hell for us. We're miserable. And and it kills our motivation, everything. But when we're in momentum, that's the drug we crave. We want to feel like we're making progress and moving forward. And so I'm that drug dealer. That's what I give out to clients. I'm like, let's go.
You do.
Hopium. So got to give them some hope. And then they're excited and believe they can do it. But yeah, if you believe you can do something big and you've got a big vision, a big dream, you start to find new pathways. You start to find new ideas. And so you're working on some crazy stuff. So let's talk about capital meets operations. How do we marry private equity with property management? And could other property managers do this? I'm excited to hear.
Absolutely. So I started in the private equity world really recently. It was like January of this year. And I feel like I've just been drinking out of a fire hose, like learning and I've just made sure to put myself in the right rooms where I'm just like absorbing knowledge and information and wisdom from people and family offices that have been doing this so much longer than I.
You've been really focused on learning the private equity space, which a lot of people, that's like some crazy thing they don't really maybe even understand. They're like, oh, I don't know how it works. And you decided, hey, I'll get in on this.
Oh, go ahead. What was that?
You said, I want to get in on this and learn about this.
Yes.
And started figuring it out. All right. I'm going to plug our sponsor real quick, who you use, Vendoroo. How's it going with Vendoroo?
It's amazing. We love them. They honestly, they take care of everything. They're really good about communication. I think they're phenomenal. They've been a game changer for us for our day-to-day ops.
Okay, cool. Yeah, I mean, so let me read this and then we'll get back into the show. So many of you tell me that maintenance is probably the least enjoyable part of being a property manager and definitely the most time consuming. But what if you could cut that workload by up to 85%? That's exactly what Vendoroo has achieved. They've leveraged cutting-edge AI technology to handle nearly all of your maintenance tasks, from initiating work orders and troubleshooting to coordinating with vendors and reporting. This AI doesn't just automate, it becomes your ideal employee, learning your preferences and executing tasks flawlessly, never needing a day off and never quitting. This frees you up to focus on the critical tasks that really move the needle for your business, whether that's refining operations, expanding your portfolio, or even just taking a well-deserved break. Don't let maintenance drag you down. Step up your property management game with Vendoroo. Visit vendoroo.ai/DoorGrow today and make this the last maintenance hire you'll ever need. All right, cool. So let's talk about this private equity stuff. Help me understand what it is. I'm fairly ignorant. So
basically, I mean, it's a very vague term, private equity, and it can span so many different asset classes. And I think that's I'm sidetracking just a minute, but I think that's one of my favorite parts about the private equity and PE industry is because you can meet somebody in your same asset class and they're doing something totally different. Like, for instance, what you're teaching, Jason, with the property management and these operators and entrepreneurs who are owner operators, really, you're teaching us the same framework and we're doing the same exact thing. There's nothing wrong with that. That's great. That works. It's systemized. In private equity, it's all wild cards. There's a lot of structure to it, but at the same time, everybody can be doing something different. And you're not in competition truly because you all have your own unique spin on it. So it's cool. But what it means is that So our firm, we bring in investor capital, either through debt or equity, and then our investors trust us. We let them know what we're investing in. We usually have it depends on the type of investment. So I try not to get too technical here. It depends on the type of investment, but we let them know, hey, we're investing in XYZ companies, or we're investing in hard assets with purchasing real estate that meet these certain criteria. So instead of these investors taking their money and putting it into the stock market, they are putting it with private firms, because the stock market is the public equities, and then private equity is these private individually owned firms that you have really large ones like BlackRock and Blackstone and all of those, and then you have a lot of small ones like myself who are just getting off the ground.
Right. Got it. Okay. And so how can property managers start to get involved in this and create this marriage? What are you doing?
Yeah. So we're kind of doing it a little bit backwards. Most private equity firms, they start with raising capital and then they're going out and buying the asset, and then they're outsourcing their vendors. So one of those vendors being property management. And that's really where the gains and losses are happening, is in the daily management style there. Then they realize and typically restructure that they could be making more money. They could be increasing their bottom lines and everything else with that management. Everything hinges on the management when you're talking like hard assets in real estate, whether that's multifamily, commercial, resident, whatever it is. So when they bring it in-house, they are restructuring.
Yeah.
And there's also been a huge problem with, and I've been hearing this lately, huge problem with investor capital really not being watched out for by these firms because they're outsourcing all their vendors.
Right.
What we did instead is I had already have the acquisition engine through our brokerage. We've already got all the systems set up in place for our property management firms, both short and long. Now we added the private equity firm. I have a Series 65. So we're actually a state registered like investment advisory firm for asset management on the back end, which a lot of private equity firms do not have that.
Okay.
And then we added the capital. So we literally just did it backwards. And now we're focused on acquiring not only hard assets with cash flowing tenant occupied portfolios that meet certain metrics. We have to have a certain IRR, we have to have a certain cap rate, and a certain cash on cash return to even pique our interest. The other thing that we're buying is property management businesses. So we are working on acquisitions right now. We just completed one last week, and we've got 2 more in the hopper. So we are going in and offering these off-market portfolios, minimum 20 up to, we have no limit on how many we'll buy, but like minimum 20 units. And we want creative financing. So we want to structure the deal where the seller and the owner is holding the majority of that note. We're using investor capital for the down payment. We're saving some to hedge for reserves. And we're going in and buying these companies to add to our revenue and to our bottom line.
Love it.
Roll up. That's the name and the term that's used in the private equity space is roll up.
Roll up. Got it. So I've seen some of these companies in the past. I had a client, he eventually exited and sold his business to Home River Group. He had like 2,000 doors. So then he was more of a partner in Home River Group, 30,000 eventually. And he became kind of a consultant that would come in, and these roll-ups that were being done in some instances, because they did it the reverse way from what you did, they thought they could just throw money at the problem. So they went and acquired a whole bunch of property management companies. Sometimes like some companies would acquire like 10,000 doors. Then they would fire like 7,000 of them because they realized there was so much garbage and it was difficult to manage. And then they thought they could just put in or install a property manager in, and then the business would just run. But no real leadership for the boots on the ground. And so they would bring him in as a consultant. He would go in, fire everybody, organize the team, build a business, and act as an interim CEO till he got the thing healthy and running. He would make a lot of money because they were losing a lot of money trying to make this work. And people don't realize how hard property management can be. And so I think, yes, property managers have an advantage because they have the hardest piece of this entire puzzle. It sounds like.
Yeah, it definitely is, because you're dealing with tenants, you're dealing with the day-to-day, you are the boots on the ground. So that is why it is so important. Before we started any of this, I wanted to make sure that we had the proper systems in place, that we could scale 500 more doors without blinking an eye. That is where you have to have that mindset, and like you have to know what's going on before adding, because when you just add doors and just think that exactly what you said, add doors and thinking that that's just going to like solve your problem, you're just multiplying your problem. Whatever problems you have at 20 doors is going to be tenfold at 1,000 doors or more. So, and more just doesn't necessarily equal better. And that is one reason in our contracts, we actually do have clawbacks. So if we do end up getting rid of owners that just aren't a fit, our purchase price is reduced down from the seller. So it gives the seller an incentive to ensure that they're selling us a good.
Got it. Yeah, that's important in any sort of acquisition deal. So for other property managers that are looking to get into private equity and they're looking at maybe starting to do this because they're like, you know what, I've got a healthy property management company. We've got the systems in place. Is there somebody that I can partner with on this that already knows how to do it? Or can I go and learn to do this? What would you say between those two options, and where would you send them?
Really, it depends on the person.
Yeah.
This isn't for everybody. What I would recommend, and this is honestly what I tell anybody, no matter what business they're in, if they're thinking about growing, where do you want to be in 3 years? And let's reverse engineer it from there.
Got it.
So if you want to, like for us, our plan is to roll up to about 5,500 doors and then exit. So I already knew where I wanted to be. And so like I wanted to exit at a certain amount. So I was like, how do I get to this amount? And then I just backed it up from there. But everybody's going to have a different goal. So I would highly recommend just like starting with that initial goal. If that goal is freedom, if it is like you want to be able to exit, you want to just run a massive company, whatever it is, start there and then figure it out backwards. As far as bringing on capital and investor capital, whether they want to partner with somebody or if they want to like bring on debt, that's also a comfort level thing. And it also depends on like what you and that other person that's bringing in the capital agree to and what you both feel like is the optimal solution. But before doing that, definitely educate yourself and find someone either as a consultant. Like right now, I am doing a little bit of consulting work for different funds as well as like companies like what we're doing for, to help them with what their goals are. Let's back it up and then let's go from there. And like just adding some advice and getting them in touch with the right people that they need as far as connections, analysts. Numbers are so important when you're talking with investors. You can't just be like, I think it's going to make this. An investor, especially a sophisticated one, is not going to go for that. Maybe friends and family will, what I call country club money, but a sophisticated investor, absolutely not. They're going to want to see a pro forma. So there's so many steps involved before you ever bring on a dime of investor capital. I'm sorry, that's not like a...
Well, it's like, it sounds like the path is maybe this. Like if you're a property manager first, you got to get your side of the room clean.
Yes.
You got to get your business tight. You got to get operations working, maybe reach out to DoorGrow, get a little help, but you got to get things really well dialed in, because it doesn't make sense to go start playing with other people's money and be on the hook for other people's money and investors if you don't really feel like you have the ability to scale, you don't really feel like you can handle stuff. Because if once money starts flowing and doors start adding, then if your stuff is okay, it's going to be stress tested and probably not okay.
Yeah, exactly.
So that's probably first. Next, they need to learn about private equity, figure out that game. And then even once you figure out how that all works, then you got to get good at selling it, which you are already a natural, salesperson. You've invested a lot towards figuring that out. But then you're going out and you have to raise the capital.
Raising capital is literally one of the hardest jobs. It is insane because you want to build a relationship and you want someone to trust you, but you're also asking for a check. And so it's trying to balance the relationship aspect as well as the transactional aspect. And it's harder as a woman because private equity is definitely, there's not a lot of women in this field. So it's even harder being like of the opposite gender. So there's a lot to balance there. And so getting comfortable asking, but not being pushy. It's that I've learned so much from.
As a woman, you've had to take maybe a more feminine approach, or you go in hot the way most guys would.
It's a person. It depends on my audience. You have to sell the way somebody wants to buy. So I've learned not to. At the beginning, I was definitely very transactional. And I've learned through a dear friend of mine that to be more relationship based, and then that will come a little bit later with the transaction. But at the same time, because I'm like, I need to know now. Like, I don't want to waste my time. I don't want to waste their time. We just need to lay it out on the table right now. They need to know what I'm here for. I've had to like roll that back a little bit. And since I have, the checks have been definitely coming in a little bit smoother. So it was a huge learning experience for me.
Ashton, how old are you right now for those listening? All they've heard is 23.
I'm 30 now.
30 now. Okay. You're 30 years old. You're doing amazing things. What amount of capital are you raising right now? Like, what's your goal?
Yeah. So we do different like rounds or like tranches of raising. And right now we're raising for specific projects. So as the projects come up, then we go out to our current investors first and then to like new potential investors next. So in the spring, we're about to start doing another raise for a business and then a couple other real estate portfolios that I'm looking up. So that is going to be around the $800,000 mark. of capital. And typically we do like minimum commitments of 100, because when you get into smaller amounts, typically the investors that are just become a little bit more needy, because they're not as sophisticated, and we want to deal with the investors who are.
Got it. Yeah, that makes sense. Very cool. Sounds like you're doing really cool things. So Ashton, for those that are listening and they're curious about you, they're curious about maybe getting into this, you mentioned you do some consulting. You mentioned there may be investors, or maybe they want to get in on some of the investing stuff that you're doing. How can they get in touch with you?
So they can send us an email. That would be the best way too. You can send it to info@fx2capital.com. And we, one of our interns checks that email on the daily. So then we can set up an investor call and go through really what your goals are. What does your portfolio look like right now? How are you diversifying yourself? And maybe we can talk about what we can do to help increase that, maybe rebalance you a little bit in the private space and in the private markets.
Cool. Well, property managers, if you're listening, I think Ashton's definitely doing something that's very cool. A lot of you probably could get in on this or create some sort of alliance or relationships that could allow you to be part of something like this, even if it's just you're getting doors from other people that are in the private equity space that are rolling up a bunch of investment properties. This would be easy doors for you to get on if you really could do a good job. And it sounds like that's the linchpin. That's the hardest piece of the puzzle. And if you're a good property manager, you've got that dialed in. Ashton, I appreciate you coming on and sharing this here on Portal.
This was so much fun. It was so great talking to you.
Awesome. So we'll go ahead and wrap up. For those of you that are feeling stuck, stagnant, you want to take your property management business to the next level, reach out to us at DoorGrow.com. For a free training on how to get unlimited free leads, text the word leads to 512-648-4608. Also, join our free Facebook community. It's just for property management business owners at DoorGrowClub.com. And if you want tips, tricks, ideas to learn maybe about some of our offers, subscribe to our newsletter by going to DoorGrow to subscribe. And if you found this even a little bit helpful, don't forget to subscribe, leave us a review. Anything like that would really help us out. We would appreciate it. And until next time, remember, the absolute slowest path to growth is to do it alone. And you heard Ashton, she's leveraging a lot of people to do what she's doing to grow. So let's grow together. Bye, everyone.